Hi, this is the Movers and Shakers show, the monthly show where we break down the top and bottom performers of each asset class and try to ascertain exactly whether that strong trend is going to continue or reverse in the weeks ahead. So first and foremost, we're going to be kicking off with the indices space and the two sides of this story, both out of Asia. And certainly it feels like one area has benefited at the expense of the other. And that is the shift out of Indian stocks and into Chinese stocks. Of course, part of this is around the DeepSeek announcement, and people are suddenly starting to feel like China could be at the forefront of the AI boom. And certainly when you look over at the US, many are saying, well, AI has been overplayed. We need to see significant revenues around AI because these companies are so highly valued in association with that AI boom. Well, what if Chinese companies are completely undervalued from that perspective? People focusing so much on the economics of the here and now that they're not necessarily building in the pricing around expectations and future growth and revenues for some of these big tech companies. So that has really helped shift the narrative. Alongside that, we have seen, of course, Donald Trump coming out with that 10% tariff on Chinese goods. Now, when he was trying to get into office, he was talking about 60%. And so that also means a recalibration to an extent of people thinking maybe it's not as bad as we might have thought. Donald Trump has already said, I don't really want to implement these tariffs. I'd actually like to have a wide trade deal where China invests in the US, where China essentially has the ability to buy a fixed amount of assets from the US. They've done that in the past under Donald Trump. And so the idea that that's the end game rather than imposing tariffs and keeping them that way, again, that's good news for the Chinese markets. Now, the flip side of it is that, of course, people have been hung up about China for such a long period of time that they look elsewhere when it comes to their sort of growing, developing countries. And India has been at the forefront of that. And it feels like there's a rotation out of one EM market and into another. And that means people rotating out of the likes of the Nifty and into the Hang Seng. So let's kick off first and foremost with the Chinese market, or the Hong Kong market, with which is the Hang Seng. Now, bear in mind, when you're looking at exposure to Chinese stocks, generally international investors will take advantage of the Hang Seng. The likes of the Shanghai Composite, that's more for domestic Chinese traders and investors. So this is mainly a move by the international community into Chinese assets. You can see here that the weekly time frame shows you this big boom that we've seen over the course of February, bottomed out in January. So it's been a strong move. Now, ultimately, from a wider perspective on the monthly time frame, you can see we're reversing a long multi-year downtrend. But the fact that we've broken up through this resistance level, 22788, points towards that bottom being in. And so now we can look at the near-term trend. Here's the weekly time frame. So we're looking at these as retracements before we push higher once again. So here's one retracement. That's probably a 61.8. Let's just get a deep fib there. So yeah, 61.8 retracement. The next pullback here comes into beyond the 61.8. So another deep retracement, similar kind of areas for both of them, really. And then we've rallied once again. And we don't necessarily know that this is the peak per se. And we have just seen some data coming out of China that has shown improvement on the PMI front. So there's grounds for optimism. But Donald Trump's talking about putting another 10% tariffs on. So do we see a potential pullback coming into play? Possibly. But I do think the bottom is in. So whether we retrace once again to the extent that we've seen in the past, and remember, these are sort of multi-month retracements. So we don't necessarily know that it's going to play out exactly the same. But if we do post such a retracement, it's a good chance that that would be exactly that. It would be a pullback before the bulls come back into play. Generally, the bullish phases tend to be more short-lived in nature, sort of 1, 2, 3, massive boom there, 1, 2, 3, or 1, 2, 3. So you sort of get a 1 month setup, bit of a pause and a big boom. We had a 1 month setup here, and then we saw the boom. Are we rolling over here? Well, let's look at the daily time frame. You can see here that we're getting very close to this key area of support. Let's just move this horizontal onto here. So you've got sort of 22723 that, if broken, would by and large negate the uptrend that's been playing out here over the intraday basis and point towards a likely reversal here coming into play. We don't necessarily know how long that reversal is, but there is a good chance that we could see some profit taking coming into play here for the Chinese market or the Hang Seng, the Hong Kong market. And in which case, yeah, maybe we come into a more bearish short-term phase. But certainly it looks, for all intents and purposes, like we're set within a nice bullish trend here over the course of the past year. And that points towards any near-term pullback as being a potential setup for the bulls once again. But that's going to be a really interesting one to follow as people try to see whether the Chinese recovery story is going to go hand in hand with potentially not as bad as people thought with the US and China, and then the whole AI move. Like I said, when it comes to the Nifty, by and large, if we look over the course of, this is not necessarily the market we want to look at, because let's go to Nifty 50 here. There you go, because that was not up to date. So in terms of the Nifty, we can see here from a long-term perspective, it's an incredible performer. But it started to show some cracks when we saw a break down through trendline support. Now, I remember looking at this in a previous iteration of our sort of movers and shakers and saying, there's a good chance that we retrace and find some support. Well, that's not happened. And we're coming back towards this horizontal support line, or this swing low support, which is 21281. The closer we get to that, and if we do break through that, the more likely it is that we've rolled over. Now, we've taken out all of the fib levels, so increasingly looking likely that this market has topped out for the near term. This is the daily time frame, so lower highs, lower lows. At the moment, we're on that lower low leg. We could retrace at some point, considering we've come off the back of a very strong monthly move lower. You can see by and large on previous retracement phases, sometimes they last sort of 10 days, sometimes they last a couple of weeks. So are we going to enter a retracement phase at the moment? Difficult to say. It feels like we're sort of relatively overextended towards the downside, but we're seeing weakness in terms of US markets as well at the moment. So global indices seeing some sort of concerns around tariffs coming into play. And that's certainly showing up here. So if we do see a near-term rebound, I think it's a good chance it does get sold off once again, unless we see a rise up through the likes of 23807. Next, let's look at the likes of, there we go, of the FX space. So top of the pack is the Japanese yen. Bottom is the New Zealand dollar. Essentially, when it comes to the Japanese yen, it's been a really interesting time because we've been seeing some significant recession fears around the US economy. The US economy has been massively propped up by government spending over the years. Well, Donald Trump wants to be done with that. And there's talk of them essentially saying, well, we want it to be a private-led economy, not necessarily by the government, and it might take 12 months for us to sort of get into a good position. That points towards a possibility that in the next 6 to 12 months, we might be entering a recession. And so the US dollar is getting hit despite the fact that you're seeing risk off throughout markets. That's because people don't necessarily think that the US dollar is the best positioned currency to reflect that haven status if that's where the recession's taken hold, and not the rest of these countries. And so you look at the other havens. Well, the Japanese yen is the obvious one because they are planning to raise rates further. We have, of course, got rising inflation over in Japan. So it really does point towards strength for the yen. On the flip side, New Zealand dollar, we're continuing to see easing from the RBNZ. There's an expectation we see more of the same week in terms of the inflation outlook. And so that economy, which is, alongside Australia, highly reliant on exports around the globe, it's really at a sweet spot when it comes to monetary policy tying up with the breakdown of global trade and a highly internationalized economy. So let's put the two together. Let's look at what's happening in terms of the New Zealand dollar against the Japanese yen, because that's going to be the strongest trend in terms of the FX space that's been playing out over the past month. And as you can see here, really significant declines here. I want to look on the weekly time frame, as we always do. Let's look at the big trend. So the big picture is actually bullish over the course of that low in 2020 all the way up to that peak in 2024. And since then, we've seen a sharp pullback retracement, and now we've rolled over and we're just continuing to decline. So it's a trend worth following. If we do see a move into sort of a retracement mode here, that's exactly what it would look like. It looked like a pullback. We don't know where the low is, right? I mean, if I draw this fib on here, there's a good chance it just continues to move lower, and therefore it's irrelevant. So you'll have to draw your own on, essentially. But we're looking at a very clear and strong downtrend. And each time you see that pop, it gets sold off once again. Now, bear in mind, this is a good example of exactly the sort of complexity of some of the moves, right? So you've got a downtrend of lower highs and lower lows, but then within that, you might find something to say, oh, look, we've seen a higher high, and therefore, is it time for me to be bullish? And the same could happen here, higher highs, higher lows, right? But you have to be aware of the fact that, you see trends within trends, and ultimately you have a sort of mean trajectory on the top end here. And so there was a good chance that when you get very overextended in one direction, that's when you see the sort of higher highs, higher lows coming into play, and you retrace that initial leg lower. It's not necessarily something I've done in advance. So let's see how this lines up. You couldn't make it any better than that. 76.4 fib, retracement, and roll over for this pair. So absolutely lovely. So that's an example of why when you see a move overextended, so sort of too far away from where the trend was by and large contained within sort of that kind of thing, right? And we saw that overextended move. That points towards when we do see the rebound potentially taking the form of not just one single pullback and then a sell-off. You might see a multi-legged retracement. And that's when you sort of look at that strong move lower and you expect it as a sort of percentage retracement of that. On this occasion, we've come up to the 76.4 fib and rolling over once again. So the bears still remain in charge despite that sort of higher highs, higher lows, because now we've broken down through that swing low. We've seen that sort of long lower shadow, but I think there's a good chance we do continue back through the lows of 83664. But certainly, we're looking here at a very clear trend. So as long as price remains below this 84875, then the bears clearly in charge as things stand. And the final area we'll be talking about is the commodity space. Natural gas at the top, palladium at the bottom. Natural gas, of course, an absolutely key one at the moment. But it's really interesting because by and large, there's been a big sort of focus on natural gas prices in Europe. And generally, when you see nat gas quoted as a sort of trading instrument, it's typically the US pricing for natural gas, which, of course, is influenced by demand and supply in the Eurozone or in the EU, around Europe, which is the Dutch hub. We also see the UK hub for gas. But generally, it's more likely to be influenced by effects closer to the US. So what's happening in the US? Well, of course, there's the sort of drill, baby, drill, and everyone thinks, oh, brilliant. We're going to see so much more gas and oil that it's going to crash prices. That is a potential. But people, as Donald Trump came into power, realized, well, it takes a bit of time. And quite frankly, many of these producers have been in a position to drill as much as they wanted in the first place under Biden, right? And we saw record production of oil and gas out in the US. And ultimately, we're now in a position where we're seeing potentially a breakdown in the relationship between the US and Canada. And that potential lack of supply coming from Canada means that there's a possibility that US gas prices go through the roof. And we're seeing this, 24% over the course of the month. This isn't something I want to talk about every month because gas is always at the top or the bottom because it's been devalued to an extent that we see really wide swings. But yeah, we see these really big percentage moves over the course of the month. In terms of Palladium, one of the main reasons for it, not main reasons for it, but essentially one of the main uses for it is for catalytic converters for fossil fuel powered cars. Of course, part of the story around the devaluation of Palladium over the years has been the move towards electric cars, and the electrification of vehicles means that there isn't a demand for catalytic converters to try and make dirty cars clean, essentially, to the same extent. So you've already got a wide theme that should provide a bearish narrative for this commodity. But then on top of that, you have the tariffs that Donald Trump is implementing or proposing. And so that suddenly means people are looking at lower demand for cars, essentially. So lower car sales means less companies buying the product to make catalytic converters to put into cars to sell them. Remember, people still buy normal cars. It's not only EVs that are sold nowadays. And if people are buying less cars, then that means there's less demand on top of that wider narrative and theme towards electrification. So let's kick off with the nat gas chart first and foremost. So here's natural gas. Remember, US natural gas. And what we're seeing here is a very clear sort of bullish trend playing out over the course of the second half of last year and coming into this year. That really strong move higher is a function of, in part, the fact that we'd seen that pullback coming into it, right? So half of the move is just sort of recovering the losses leading into February. But nonetheless, we've rallied up. Let's go on a weekly time frame. We've rallied up and very clearly based out here. So gas prices are on the rise. They've bottomed out. We've seen this massive rally around the Russia-Ukraine war. We've seen a massive collapse back to sort of pre-war lows. And now we've based out. And so the bulls are very clearly in charge as things stand. You can see this recent pullback sort of coming into almost sort of not necessarily a flag, but certainly a sort of descending channel kind of thing here. I guess a descending wedge. And now breaking higher. And certainly as I speak, the fact that we're now looking to challenge this initial move here, 4176, means that this phase is over and the bulls are in charge once again. So would expect to see further upside to come from here as we build on the base and the bottom that we have seen taking shape over recent months. But certainly, you know, this is a bit of a warning sign, because whilst we're seeing a collapse in oil prices because OPEC have essentially thrown in the towel and have decided that they're going to ramp up production, natural gas isn't necessarily taking notice of that. We're seeing that go in the opposite direction. So gas prices higher, oil prices lower. And certainly as things stand at the moment, this breakout towards the upside we're seeing today points towards possibly more of the same. And there was a story that I saw around this. You know, I was talking about the whole story with Canada, but I saw this update. Let me see if I can find it. In any case, it's basically the Canadians saying that they're going to cut off energy supplies to the US, right? So if you want to, there we go. Ontario, Canada's Premier Doug Ford has threatened to cut US electricity to several American states if tariffs go ahead. So there could be an energy war between Canada and the US, and that could mean much higher US energy prices. So this is US gas. There's a good reason for that to be happening, that we're seeing this massive spike taking hold at the moment. So this should be highly volatile around the news. Sorry, I should go full screen. The news around tariffs between Canada and the US. And then finally, let's look at Palladium. Like I said, the wider trend is a bearish one. There you go. Let's get rid of that. Bearish trend, but we've sort of devalued to the point where markets appear to think, you know, can we go much lower than this? And so we're sort of at the moment caught within this sort of consolidation phase. So there's no given that we will just collapse from here, quite frankly. I don't necessarily know where the point is in terms of the sort of incentive point where if prices value any further, then people just stop creating it. Then suddenly you see the sort of demand supply narrative completely shift, and therefore it lifts prices. Not sure exactly where that point is, but certainly markets very happy with where it is at the moment following that huge devaluation that we saw leading into it. And so, you know, yes, we've seen this sharp sell-off, but, you know, if we look at, say, the weekly time frame, and then we try and pick some of these key lows, here we go. So obviously you've got the bottom here, then you've got, well, let's just put it over there. Then you've got one here, got one here, got one here. So you've got this sort of cluster of support down here. And we've retraced at the moment, and now it looks like we're sort of trying to regain a bit of ground. So, you know, I just think there's, you know, it's a relatively messy lows that we've got here, but they're roughly in the same kind of area. And that's kind of where we are at the moment. So I wouldn't necessarily be chasing the shorts on this one at the moment. Yeah, fair enough. If we manage to clear through this zone of support and maybe get through your sort of 850, 860 kind of area, then the bears could be back in charge, and you could see that trend continue once again. But very clearly, we've gone from a trending market to a consolidation phase, choppy consolidation, no necessarily super clearly defined resistance and support here. You know, I wouldn't necessarily want to touch it from that perspective. You know, if we do see a pullback, which we've seen at the moment, you know, is there a possibility that the bulls could come back into play? Yep, there is. So, you know, arguably there's probably more of an argument for us to just rally and regain some of that ground rather than selling it in a continuation of that, especially given the fact that we've rallied up through the 946. So from my perspective, I wouldn't chase that sort of bearish momentum for Palladium, despite the fact that, of course, over long term, it's been an incredible downtrend. I just think that we've entered seemingly a different phase. And you have to be able to recognize the different phases of these different markets to gauge whether they're worth your while trading or not. And Palladium, possibly not for the time being. I hope that's been useful. We're going to continue to provide you with content, short videos, long videos, previews for events and data releases and all sorts alongside that. So make sure to like and subscribe for more content. My name's Josh Mahony, Chief Market Analyst at Scope Markets.